Welcome. I'm Priscilla Amrock. I'm an associate accountant in the Budgets and Spending Unit. The Budgets and Spending Accounting section establishes and maintains appropriation control records for all state appropriations enacted by the legislator and authorized by the budget director. This includes the reappropriation and lapsing of appropriation records, requesting chart of accounts changes needed for proper appropriation control and reporting, accounting for member item projects, and monitoring negative personal service charges. Section staff reviews and approves state agency originated budget transfer journals, general ledger journal entries that come into our filtered work list, and accounts payable journal vouchers for appropriateness and accuracy. I will be presenting today along with Beverly Lucas, Ryan Romansky, and Danielle Whitman. We will touch on the budget process, different types of appropriations, chart of accounts, budget transactions, refund of appropriations, GL journal entries, and AP journal vouchers. This chart shows the yearly cycle of the budget process. The budget process starts when the budget director issues the call letter to agency heads. By fall, agencies submit their budget to DOB for review and approval. Once DOB approves the budget, they work with the governor's office to finalize the budget. In January, the governor submits his executive budget proposal to the legislator for approval. Once the enacted budget is passed in April, the budget is executed and the process repeats. Once the budget is enacted, budget management is expected to comply with state finance laws and monitor that funds are not dispersed in excess of what was appropriated in the budget bills. Budget management also provides tools for managing appropriations. An appropriation is a statutory authorization to make expenditures during a specific state fiscal year and to make disbursements for the purposes designated up to the stated amount of the appropriation. Appropriations are broken down by a state department or agency, a specific program, payable from a specific fund for a specified purpose and account. The different types of appropriations are state operations, local assistance, debt service, capital, and member items are found in the Aid to Local bill. The State Operations Budget Bill supports the operation of state agencies. It contains personal service, non-personal service, and general state charges appropriations. Personal service costs include payment of salaries and compensation to state employees. Non-personal service costs are payments for miscellaneous contractual obligations, supplies and materials, travel, rentals and repairs, utilities, postage and shipping, printing, telephone, and other operating costs. General state charges are mandated by statute, collective bargaining agreements, or court order. Charges in this category be further subdivided into fringe benefits and fixed costs. The Local Assistance Budget Bill contains appropriations from grants for aid to various localities, including local governments, school districts, not-for-profit organizations, and financial assistance to or on behalf of individuals. The Debt Service Budget Bill contains appropriations for the legal requirements of state debt service on long-term debt and payments on certain lease purchase or other contractual obligations which are paid from debt service funds. These account for the accumulation of money for and the payment of principal and interest on general long-term debt. Lease purchase payments for the state university, health and mental hygiene facilities under contractual agreements with public authorities are also paid from debt service funds. The Capital Budget Bill contains appropriations used to finance a variety of capital construction costs, including planning, land acquisition, design, construction, construction management and supervision, and equipment costs, highway, parkway, and rail preservation projects, outdoor recreation and environmental conservation projects, and buildings and other capital facilities required by various state departments and agencies, payments to local governments to help finance their capital programs, and advances for capital construction costs reimbursable by public authorities, instrumentalities of the state, the federal government, or local governments. Appropriation periods by law are defined in state finance law. Section 40 contains the liability periods, appropriation periods, and lapse dates. There is a maximum life of 2 years on an appropriation. Most appropriations are available for 1 year, April 1st through March 31st, with a carryout period for outstanding liabilities already incurred. Budget bills sometimes contain language that allow prior liabilities to be paid from current year appropriations. This slide contains the appropriation periods and lapsing dates for the different types of appropriations. The lapse date for state operations is June 30th, aid to local capital projects, debt, and Legend Judy lapse on September 15th, and SUNY and CUNY lapse on September 30th. Prior to lapsing, the agency is responsible for monitoring SFS reports to ensure budgets are not overspent and properly lapsed. Agencies should review the NYKK 0004 appropriations due to and not due to lapse report and notify the appropriations mailbox of any discrepancies. Negative segregations should also be corrected prior to lapsing. The NYKK 0264 report should be used to identify any negative appropriate seg balances. Fringe benefits and indirect costs, GL journals with errors should be corrected prior to lapsing. The NYAP 1547 report should also be monitored to identify any pending transactions using a budget that is about to lapse. Ideally, this report should be clear prior to lapsing, and identified transactions must be posted or deleted. See GFO Section 18 for more detailed information on lapsing and the deadlines for lapsing transactions. I will now hand it off to Beverly, who will discuss chart of accounts and the different types of budget transactions.
Thanks, Priscilla. I'm Beverly Lucas, and I'm an associate accountant in the Budgets and Spending Unit. I've worked for the State Controller's Office in the Bureau of Accounting Operations for 18 plus years and in the Budgets and Spending Unit for half of them. Now on to business. The Chart of Accounts, COA, is the foundation of the statewide financial system, SFS. It provides each business unit, department, fund, program, budget reference, and account within the state a unique identification number to identify financial transactions. Some transactions may have other chart fields such as product, operating unit, and chart fields. In the project costing module for grant budgets, they also include the project ID and activity values. Each appropriation is unique in its own way. For instance, no two appropriations in the budget bill will have the exact same chart of accounts. See the GFO Chapter 5 for more information. In the statewide financial system, SFS, there are many trees that indicate how the chart of accounts roll up. There are several levels to each tree. The trees that are used to set up appropriations are the KK Statewide Program Tree, which shows all the programs that are set up in SFS. The KK Statewide Account Tree, which lists all the accounts that are used in SFS. The KK Statewide Department Tree lists the different agency departments. The KK DB Program Tree, which is the Commitment Control DOB Program Tree, and the Reporting Statewide Program Tree, in which all levels are shown, beginning with Level 1, total all programs, through Level 3 and below, which includes sub-programs, which are the budgetary program and transactional values. The sub-programs can be many levels. This is the tree that is used to show where the roll-up should be for the new program requests. Appropriation budgets are put up in SFS using the budgetary level chart of accounts, as do any budget transfer journals and inter-unit budget transfer journals. When inputting other transactions such as vouchers, deposits, and journal entries, the transactional levels are used. Each state agency is assigned a particular accountant in budgets and spending who handles setting up the agency budgets and reviews and posts budget transactions, GL journals, and AP journal vouchers for the agency. Once the executive budget comes out, your assigned accountant will review the new year budgets and start preparing to get the budgets put up in SFS. While reviewing the budget, they may notice that there are what appears to be new appropriations in the budget bill. They will reach out to the agency to determine if a new program or fund value is needed. If in fact it is needed, they will ask the agency for a confirmation of the new program name and placement on the trees. The agency response is reviewed by OSC's Bureau of State and Accounting Operations, Financial Reporting and Oil Spill Remediation, as well as the Division of Budget. OSC will submit a request to SFS for your new program values. SFS will assign one new budgetary program and one transactional program for each confirmed new appropriation and bill copy. If the agency needs more than one transactional program, once they receive from OSC their new budgetary program value, they may request more transactional values from SFS. This can be done by submitting a COA change request to SFS. Budgets and Spending begins a review of the new budgets as soon as the first executive budget comes out, and thus tries to request new programs from that budget and all consecutive budgets as they are approved. This is to speed up the process on getting new programs set up as soon as possible. SFS will make the new budgetary and transactional values available for use once the enacted budget is approved and the programs are approved for placement on the trees. The length of time that it takes to create new program values depends on timeliness of the agency to respond to their accountant in regards to the program being new and where on the trees they need to be placed. Here's an example of the KK statewide program tree. You can see it is set up first by total programs, the 5 zeros, then by major program, which is the level 2 program, then budgetary program, level 3, and lastly by the transactional program. Each separate appropriation and budget bill copy will be assigned only one budgetary program, but can have several transactional programs, as seen here. Let's move on to budget transactions and movement of appropriation authority. In SFS, there are 3 types of budgetary transaction: budget journals, budget transfer journals, and inter-unit budget transfer journals. All types of budgetary transactions are processed using KK-SEG. When posting these journals, the parent, KK Appropriation, is automatically updated. This is why on the header tab of these journals you will see 2 entry types. Both of these entry types should match on every journal. Only OSC uses KK-SEG on regular budget journals. These budget journals are used to put up budgets in SFS. Agencies use regular budget journal for KK Project Child or Agency KK only. They may not use regular budget journals for KK-SEG. If we see that they do, we deny the journal and ask the agency to use a budget transfer journal or an inter-unit budget transfer journal. There are several types of movement of appropriation authority in SFS. The type of movement that an agency is using on a budget transfer or inter-unit budget transfer journal is indicated by their budget entry type used on the header tab of the journal. Interchanges are used on a budget transfer journal. These transactions can move authority between accounts in the same department, fund, program, and budget reference. Interchanges can also be used to move authority between programs in the same major level 2 program and same fund as well. Sometimes an agency wants to move authority between programs in a different major level 2 program, but with the same fund. If the agency bill copy states that interchange may be made, then it is okay to do so. If there is no specific language allowing this type of movement, the agency may use the 543 interchange rule pursuant to State Finance Law, Section 51. Appropriations may not be increased or decreased by more than the sum total of 5% of the first $5 million, 4% of the second $5 million, and 3% of any further amount over the $10 million. For capital type appropriations, pursuant to State Finance Law Section 93, the interchange equation is a bit different at percentages of 25, 20, 15, and 10. Department sub-allocations are budget transfer journals that are movement of appropriation authority between budgetary departments with a business unit within the same fund and for the same purpose as appropriated. These are used for movement between SUNY and CUNY campuses or public benefit corporations. Apportionments are used on both budget transfer journals and inter-unit budget transfer journals. An apportionment is a movement of a lump sum or a multi-fund appropriation to a specific account or fund. A lump sum appropriation is an appropriation in which the budget bill does not specify either a business unit and department, such as those under MSC01 business unit. Lump sums also are appropriations that don't specify a particular account code for appropriations in the state operations budget bill. A multi-fund appropriation is an appropriation that appears in bill copy where more than one 5-digit fund code would apply. The appropriation may therefore be used for more than one fund within a higher level fund group. Apportionments are also used as a movement of authority between a reserve and an unreserved segregation. Budget transfer entry types are authorized movements of appropriation authority between appropriations in different funds and/or budget bills. For example, between aid to localities and state operations. Budget transfers must be specifically authorized in state statutes. A consolidated transfer is a special designation for the movement of budget authority between appropriations as authorized in statute to support the establishment and funding of shared service functions or other specifically identified efficiency initiatives. These transfers move authority from different business units to either OFT or OGS. Sub-allocations are used on the inter-unit budget transfer journal and are movements of appropriation authority between business units within the same fund, program, and budget reference. There must be specifically authorized in state statute, either within the budget bill language or in another piece of state law. It is important to understand the differences between these movements and the proper way to reappropriate the available funds if necessary. If an incorrect entry type is used on these transfers, it is likely that during our reappropriation process, appropriations may be missed and thus lapse when they shouldn't. Now we move on to adjustment vouchers. Ryan Romansky is here to share.
Thank you, Beverly. My name is Ryan Romansky. I have been with the Bureau of State Accounting Operations and the Budgets and Spending Unit for about 2 years now as a senior accountant. Now we will be discussing adjustment vouchers, otherwise known as refunds of appropriation. An AP adjustment voucher is used in SFS to apply a full or partial refund from a vendor, recipient, or employee against the payment that was originally made. This results in a credit to the appropriation expenditures. More information on this can be found in the GFO, Chapter 7-3, AP Adjustment Vouchers / Refund of Overview. There are many effects an adjustment voucher has. It will increase the segregation balance, allowing the agencies to spend the funds again. It will increase the cash in the fund. It will reduce expenditures in the appropriation. It will update the withholdings for a vendor to help with a more accurate 1099 form, if applicable. For these, we want to use the same supplier ID as on the original voucher. It also will update the contract balance to allow the funds to be spent again, if applicable. There are many reasons adjustment vouchers need to be used. Some of them are if the vendor received an overpayment or a duplicate payment. Also, the wrong vendor may have been paid on the original voucher. In these instances, an ROA will need to be completed if the check will not be reissued. If there is a need to reduce or close a cash advance account. More on this can be found in the GFO, Chapter 7-10-C. If a refund is owed to the state by an employee due to travel and expense charges that were made in error. There is a new supplier ID for these transactions that I will discuss later. For those transactions dealing with WIC rebates, and this is due to the federal regulations requiring the treatment of these receipts. This is DOH specific. For fraudulently cashed checks. In instances of forgery, a forgery affidavit needs to be requested from New York State Treasury. This needs to be filled out and sent to the bank for a final decision on the matter. And lastly, for write-off vouchers. If a check that is deposited with an ROA is returned by the bank due to a stop payment or insufficient funds, a reversal ROA needs to be done. Reissuing or canceling a vendor check. This is handled via an automatic process, which reverses the original expenditure and credits the original appropriation charged. BSAO does not approve these transactions. More information can be found in the GFO, Chapter 12, Section 9C. Lapsed appropes, or ROAs processed against lapsed appropriations, are entered as an AP adjustment voucher with the lapsed revenue account code on the credit lines. The two most commonly used account codes are account code 32207 and 36121. Account code 36121 is used for a refund of lapsed federal appropriations, or the grant award is closed. Account code 32207 is used for all other refund of lapsed appropriations. Some less common account codes that are used are account codes 32209 through 32213, which are used for lapsed cash advances. For all of these transactions, account code 59999 is still used on the clearing line. They also help to update the contract and withholdings if applicable. Cash is increased in the fund, but it has no effect on the segregation balance as the original appropriation has lapsed. With new guidance that was issued on October 1st, there are some new vendor IDs that should be used on ROAs. Generally, we would like to see the original vendor ID used on an ROA. For cash advances, a vendor ID that begins with 041 should be used. If the original vendor ID is unable to be used, we have a few new vendor IDs that can be used. There are those for single payment refunds. There are those for Medicaid, HIT, and BHP refunds. This is DOH specific. There are those for vendor refund of P-card purchases, and in most cases, the original voucher was paid to Citibank. And there are also those for employee refunds and returns. These deal with travel expense report corrections and purchases that were made in error. If it doesn't fit into one of the above vendor IDs, then 0RAR should be used as the vendor ID. The next portion of our presentation is to discuss GLJEs and APJVs. Danielle Whitman is here to discuss.
Thank you, Ryan. Hello, everyone. My name is Danielle Whitman. I'm a senior accountant for the Bureau of State Accounting Operations and the Budgets and Spending Unit. I've been with the state now for a little over 2 years, and I've been in budgets and spending since I've started. Today, I'm going to explain the general ledger, known as GLs, and accounts payable, known as AP portion of the presentation. Now that we've been using SFS for more than 8+ years, we want to ensure everyone understands when they should be doing accounting transactions in the GL module versus the AP module. Ideally, we would want agencies to do any correcting of accounting transactions in the module that it was originated in. But there are times that this cannot happen and they need to be done as a GL journal entry. For instance, agencies would use AP journal vouchers when the original transaction was a voucher and the correction was needed to one of the chart fields. For example, program, account, department, project. The only times that the AP module cannot be used is if the fund needed to be changed, you're a bulk load agency, or if the expenditures needed to be adjusted between business units. Those particular correcting transactions would have to be done as a GL journal entry. GL journal entries are also done when correcting expenditures that did not originate in the AP module or when the supplier on the original voucher is an interagency vendor. Now we will take a look at creating an AP journal voucher. This slide represents a checklist of specific information that is required when keying an AP journal voucher into SFS. AP journal vouchers require a complete explanation supporting the reason for this transaction. This must be provided in the description or the comment field. Any supporting documentation should be attached to the AP. This includes the related voucher ID. If this information is missing or if it is not clear why the AP is being done, this will prevent us from approving the AP while we reach out to the agency. Please also note that the supplier ID, obligation date, and coding on the AP journal must match the related voucher. More information about AP journal vouchers can be found in Chapter 8 of the GFO. When an agency needs to create a GL journal, it is important the reason the GL is being done is made very clear. Agencies can do this by using the long description on the GL header screen. Agencies must remember to attach supporting documentation that will help us verify the expenses being moved and the obligation date. The backup provided should also support both the dollar amount as well as the obligation date on the GL. When filling out the project fields, agencies must also remember to include the proper analysis type. GLE is used for expenditure accounts. GLR is used for revenue accounts. Further information about the specifics on GLs are found in the GFO, noted on the slides. We know that we have covered many topics today, such as the budget cycle, chart of accounts, budget transactions, reappropriations, lapsing, refund of appropriations, GL journal entries, and AP journal vouchers. Some key takeaways from this should be when doing the ROAs, GL journal entries, and AP journal vouchers, please make sure that your description is very clear on why the agency is doing that particular transaction. It is very important to provide all supporting documentation. This will help us in reviewing and approving the agency's transactions quickly and more efficiently. Please also refer to the Guide to Financial Operations, the GFO. It is a great reference source on what we have discussed here today. Any questions for the Bureau of State Accounting Operations, Budgets and Spending Unit? Please reach out to your agency's accountant first and also CC the Appropriations mailbox on any email inquiries in case the accountant is not available. Budgets and Spending can be reached at appropriations@osc.ny.gov. This concludes our presentation for today. We would like to thank you for joining us, and we would like to open up the floor for questions.
Good afternoon. This is Beverly Lucas. I see that we have a question from Tiffany Hanlon. Can you expand on why we need to use analysis type for GL journals using projects? Why isn't it used on other GL journals?
This is Melody Getz. I'm going to try and field that question. I'm the Director of Bureau of State Accounting Operations. I believe the analysis type on a journal entry is necessary for projects because of the tie we have with projects to federal grants. And the expenditure analysis type versus the revenue analysis type is extremely important in getting information into SFS for the draw of federal funding for all federal payments. I don't know if anybody else has anything to add on that. It's not really a budget and spending situation, but it has more to do with the tie to federal grants and projects and the billing system for federal grants.
Okay, we have another question from Ursula Ficarillo. If we received one check for an ROA and the original charge included 2 vouchers, one is a P-card voucher and one is an AP voucher, is it okay to use vendor ID 0 RAR? We would suggest that you use the correct vendor IDs and do 2 ROAs rather than lump them both on one, even though it's one check. So when you send your check to Treasury, you're going to send them the 2 ROA voucher IDs with that one check, so they know there's 2 deposits that go with one check. Are the slides available for download? There's going to be a recorded copy of this presentation, so you'll be able to follow up and look at that whenever you need and share it with others in your agency. The recording will be available. You can get a download of the PDF on the controller's website. Any other questions? If anybody has any further questions that they didn't have a chance to ask, please feel free to reach out to our Budgets and Spending Unit by emailing appropriations@osc.ny.gov, and we'll be happy to answer your questions. Thank you for attending our presentation.